About it's not always bad to see the market pause a bit. You know, it's only one session, but get a little bit of breath, maybe bring some new money in. Your thoughts on this first session of the week?
I think everyone's waiting for a pullback, and that's because the market has been so positive in the year to date so far. In fact, putting this pullback of just 0.3% into context, and out of the last 13 sessions, this is just the second session where we actually have seen a down day. And in fact, if we have a look at weekly performance in the last 11 weeks, 10 of those have been positive. So it's been an extremely strong run for the Australian share market. Technically, we're coming up to an important point as well. So it looks like jitters coming from two angles. One is from a technical standpoint, where we are coming up to a very important technical level, and secondly from earnings season, which kicks off tomorrow. Having a look at the technicals first, and just having a look at a 5-year chart of the Australian share market. I actually want to start from this side, and you can see that we saw this big tumble from 2007 down to the low that we saw in 2009, and the halfway mark, or the 50% retracement mark, is at 4,946 points. So if we draw that across in yellow, you can see that we've tested this a number of times before in the past. We've tested this back in 2010, 2011, and I guess now we're testing it in 2013. So this 50% retracement mark is a very important level, which is watched by both technical analysts as well as non-technical analysts, non-chartists as well, because it does tend to be an important point. We do start off earnings season tomorrow, so it does look like that half-year earnings season sending a bit of jitters as well. Today it was really the financials which did the damage on the market. Macquarie Group was down by 1.4%. We saw Westpac down by 1.3%. Commonwealth Bank actually early on in the session reached an all-time record high and then pulled back to finish down, and that really explains the nature of the market today. We hit our peak early and then it was down all the way, and if we have a look at the intraday graph, we actually finished on the lows of the session. So that's a short-term bearish mark for the Aussie share market, but it is following a very strong run, and altogether I guess we've had a fantastic start to 2013.
Earnings season, do you see much more upside in this stock? I mean, it's one very much loved at the moment, and certainly a bit of a turnaround from where it had previously been sentiment-wise.
I mean, we've talked about this theme, I guess, all of last year, where we do expect at some point there to be an inflection point away from some of those high yielders more into growth, and we've certainly started to see that in 2013, where we have seen some of the cyclicals like the media companies, the mining services companies, as well as the discretionary retailers start to outperform compared to some of those high yielders. Yes, we are seeing the likes of Commonwealth Bank outperforming, but on a relative performance basis in 2013, the cyclicals are really coming into their own at the moment. I guess this is the half-year scorecard. In terms of full-year expectations, they're pretty low. Last year for the full year, we saw earnings actually decreasing overall for the ASX 200, but this year we are expecting to see a little bit of mild growth, and the consensus is for positive 3% growth. Now that's barely keeping up with inflation, but it is a turnaround from the negative earnings growth that we saw for the Australian market in the last financial year. Having said that, 6 months ago the expectations were much higher. They were around about 10%, and I guess one of the themes coming through is this expectation that we'll see weak earnings in the current financial year, but it's the next financial year that we'll start to see some stronger earnings come through. And that's true of the cyclical sectors, areas like the material space, where we have seen in the last half year extreme volatility, but overall downward movement in commodity prices. Also in those cyclical areas like the media companies, the building product companies, as well as the discretionary companies, we've seen brokers becoming a lot more positive in terms of the outlook for these companies, but it's certainly not in this financial year, it's in the next financial year. So some of that expectation really already baked into the market, and the market seems to be running on the next financial year, and that's really being demonstrated by the consensus, which stands at 3% growth for the full year, and yet brokerage houses are upgrading their expectations on where the index is going to be by a lot more than that. So I guess the market's always forward-looking, and in this case forward-looking by about 12 to 18 months, and that means we're looking towards next financial year. Tomorrow we see our earnings season kick off, and one of the key stocks to be watching out for is Cochlear in the healthcare space, and that's because a number of brokers have picked Cochlear as an underperformer and the possibility of surprising on the downside this earnings season. It's on Goldman Sachs' list, it's on Citi's list as well. We saw that Nucleus 5 recall And while the Freedom has been quite popular, I guess the share price movement has been quite aggressive, up 40% over the last 52 weeks. We're expecting to see a result of about $22.3 million, but no doubt it's going to be a very busy month for most analysts out there on the market.